Welcome to Crypto BS. I'm Al.
And I'm Craig. And today, I'm starting with news.
This is an anomaly because Craig hates news.
But I'm excited about this news. It came to me via email last week, and it's regarding Crypto.com, which we both know I love. I think Crypto.com's doing good things, and finally, they're fixing one of the issues I have with them. And the issue is, it's not one simple, easy to use user interface when using all of their features. They have the Crypto.com exchange, they have the Crypto.com app, they have their NFT marketplace, they have their DeFi app. Well, supposedly they're getting version 3 of the Crypto.com app or exchange or whatever they want to call it. They're getting that launched in 2 weeks. And that was 2 weeks from the time of the email, which was either last week or earlier this week. So we are sub 2 weeks away from a brand new Crypto.com app. And I have to say, I was super excited to get in on a long on Crow when hearing this news, because I think new features, new app, new look could potentially have a small boost, but I just didn't get in time.
I was looking for Crypto.com under 10. And with the run up over the weekend, it never got where I wanted it to be, so I didn't get in either. But after this news, it's continued to rise. Are you still looking to get in?
I don't know yet. I want to follow the rules. I want to look for a good RSI time, but you know, it is a play to buy the rumor, sell the news, and maybe I make that play, maybe I don't. But right now, I'm a bystander. We're still a ways away from the launch, so we got time.
Well, this is something you've complained about before on it just being a hassle if you've got multiple options on the wallet. You like the NFT aspect of it.
Well, yeah, because like as it sits right now, if I want to buy an NFT through the Crypto.com marketplace, I have to take my funds from another wallet and send it to my NFT wallet. And then if I sell that NFT and I want to use those funds, I then have to move them again from the NFT wallet back to the Crypto.com wallet. And the Crypto.com app, I think they updated it recently, but not too long ago, they didn't have a way to do limit sells or stop limits or any of the better features other than a market purchase. And I don't like that, especially because their market purchases, they get a little bit of margin for themselves in there. They say they have no fees, but they find a way to make money on that trade by putting in a stop limit, not even a stop limit, by putting in a limit, it gives you the price you want to buy it at. And them combining these things into one space not only just makes it easier, but then you also cut down on fees, not just to Crypto.com, but just exchange fees, because I'm not having to transfer from the app to the NFT marketplace and back on what should have been just a transaction, but now I have transactions and transfers.
Well, not having the ability to set limit orders has always been a problem for me on using Crypto.com for purchases. I don't use them for trading at all because of that. So for me, using it when I can get when they first opened up, they were one of the first exchanges where you could stake it. Basically, you could stake your crypto and earn 1%, but it was for a month or 3 months at a time, and that was fairly easy to get into when they first came about. But now the payouts aren't as much, and the spread is just too much on trying to do any trading.
Yeah, it's going to be nice to have the exchange platform, to have the platform where you put in your fiat. Because it's that too.
The onboarding.
Yeah, so you have onboarding, you have the exchange, you have the earn, you have the staking, you have the Visa card, which, if Crow gets to a point, I may have to up my Visa card, but that's a topic for another day. But you have the Visa card, you have the NFT marketplace. If you could have all that in one place, that's pretty significant.
I think that they're making good inroads and they are moving in the right direction.
Yeah, I'm happy about it.
Would you still, last week when we did the Would You Rather on the exchanges?
So I stand by my position from last week, and the position was, would I rather trade on KuCoin or Crypto.com and it's KuCoin. But if I were to invest in one of the companies, on which one I would be an investor in was Crypto.com.
So my question is, once this gets up and running, is that going to change it where you're going Crypto.com only?
It's still KuCoin on the trading only because of the margin aspect and the bot aspect. So they have more ways to trade, which is important to me. I like to have some flexibility in how I try to make money. Whereas Crypto.com is taking a step forward into adding limits and stop limits. It's just not on the level of KuCoin yet.
I wonder if they're still going to have that margin, that spread in there that they're going to cover. So you may have your limit in at $100.01, but it's got to go to $101.03 for you to be able to actually execute that trade.
And they could, but for the average user that doesn't see that margin, like they're not looking for that, they don't know. Because you and I know because we follow prices all the time. Mm-hmm. But if it was me as a new crypto investor and I go on there and they say the price of Bitcoin is this, and then I execute it, I have no idea that there was a margin on that.
Well, KuCoin's not KuCoin's one that also has some new features in it. And Craig, let's talk a little bit about how this new dual element is going to work on KuCoin.
Yeah, I was really excited about the dual investments that KuCoin has launched. And at first look, it seems like a really easy way to make a little extra money. Because, and I say a little extra money, I mean, if you were to hit every day, it's almost 300 APR that we're talking about, which is significant, especially considering that you're compounding every day. So that 300 APR, I don't know what that compounds into with APY, but that's a lot. I mean, that's a lot. So it seems easy. So for those of you that don't know what the dual investment is on KuCoin, what it does is you take an asset. Right now they only have Bitcoin or Ethereum. And with that asset, there's a target price for the settlement price. So let's say Bitcoin is at 20,600 and the settlement price is at 20,500. If the price goes below the settlement price 24 hours from the investment or whenever the strike time is, it will pay you out in Bitcoin. So if you're somebody that's a holder of Bitcoin trying to accumulate more, just like you would if you just staked Bitcoin somewhere and they paid you an interest rate, your total investment value will go down if the price of Bitcoin goes down, but you'll have more Bitcoin because of the interest. The dual-sided trading or investing works like that. If the price goes down, they're going to reward you with more Bitcoin. So that's good for the person holding Bitcoin. On the flip side, if the price of Bitcoin goes above the settlement price or stays above the settlement price, they will reward you in USDT. So if you were to put in one Bitcoin at 20,600 and the price is at 20,700 at the end, they're going to pay you your one Bitcoin plus X percent in USDT, and you're now out of Bitcoin. So you still made a percentage gain, you just didn't get it in the Bitcoin, right? So it's hard because as easy as that sounds, as you're always making something, the problem is if you're somebody that's trying to buy and hold and accumulate Bitcoin through staking, this way's not going to work unless the market's consistently going down, because the day that it goes up, you're out. And that's an issue.
Well, what is going to be the optimal strategy if you were going to use this vehicle? How would you use it?
It's hard to say because it's almost like you have to hit consistently in one direction or just consistently at all, right? So again, if I'm somebody that's trying to accumulate Bitcoin, I have to hit every down day, or every time I invest, I have to hit a down day. The day that I have an upside, I'm out of Bitcoin. I'm not holding it anymore. So if I gained 1%, 2%, 3%, 4% in 4 days, and then on day 5, the market goes up and I get paid my 1% interest, but the market went up 10%, I'm missing out because I'm just getting my value of Bitcoin plus X percent. And and now I'm out, and I went down with the market, and now I'm getting out with 1% extra, and it just you lose. So what KuCoin is trying to draw you in to do is they're drawing you in with good interest rates that if you hit, you will be very successful. But the one time you miss, it could cost you a pretty significant amount of gains, especially this week with how we saw the market run up.
That's a prime example. Monday or Tuesday, you would have got waxed with it. You'd have done a lot better just to be in Bitcoin altogether, as opposed to be taking the
Absolutely. The only way that you beat the market this week with it ramping up as much as it did, the only way you beat the market is if you're in one of the outlier coins that went up a crazy percentage, or if you had longed it, you had margined and got leverage on it to take it a multiplier higher.
So as an analyst, you're saying no go, don't play in it.
I'm saying we don't play the game on dual investments.
Okay. And again, we're not financial advisors. Do your own homework and check it out for yourself. Make your own decisions at your own risk. Lastly, since we're talking about these platforms and new things have been happening on it, this isn't on the show notes, but it's something that has occurred to me in the platform arena. Bitboy, have you been watching anything or listened to him at all with his running feud with Sam Bankman-freid?
I haven't been paying attention to that. No.
Okay, so he's got a deal. He's really pissed with Sam Bankman-freid, who has FTX, and he's the one that bought Voyager, looking at buying Celsius. He's the one that's collecting up a lot of these assets, and he's also pushing for a lot of crypto regulation that is not going to be good for us as average investors. Bitboy has put forth some information that he says is credible, that points towards Sam Bankman-freid doing a lot of market manipulation. He runs a lot of bots. It's how he's made all of his money. It's how he's built all this. However, I would just like to point out that over the last 2 days, 80% of the liquidations that have occurred in the market occurred on his exchange.
Really?
80%.
That's very significant.
That is striking. And if you recall back on Monday or Tuesday, when the first big pullback happened, I was like, hey, somebody just got waxed for $600,000 on FTX. Remember when we had that discussion?
Mm-hmm.
This is really sneaky. It's not that Sam Bankman-freid is losing that money because he's owning the exchanges. The investors that are coming in that are playing the game just like you and I on the exchange, when you get liquidated, that's where it's going, is the exchange. I'm wondering if he is having a lot to do with this market manipulation, and because he can see all the shorts and all the longs that are on the platform, he's got enough money to push the market.
He's got money and he's got information.
Very, very, very powerful assets to have at your disposal.
Because if you and I could see where the wall was on buy and sell, where the price will move when it hits here, that'd be a huge advantage for us. So now you're looking at a person that not only could benefit from using that information to make his own trades, but to try to manipulate the market to hit these walls so that people get liquidated. And just like KuCoin, you don't get liquidated when your debt to asset ratio is at 100%. It's going to be 97, 98%. KuCoin's is 97. So he's making 3% on that. So, I mean, if you're talking about even $100 million that gets liquidated, which is a lot, but I mean,
well, yesterday it was $1 billion that got liquidated.
If you look
and
at
80% was there, that's $800 million at 3% that he's gaining for that. Yeah, he's doing really well.
Yeah, that's going to be a lot of money.
And that's money and assets that
3% on 800 million is 24 million. That's enough incentive for somebody to do some shady work. But we're not accusing him of doing this. This is Bitboy having some sort of information that we are discussing. So let's put that out there.
Well, Bitboy's information is specifically regarding a lot of the new assets, the ICO stuff that has come out, where Sam Bankman-freid launched it a few days before, and then pumped the asset up just in time for everyone else to get in, and then slams it down.
Let's talk about when coins get listed and pump up, because this morning was my first experience with this phenomenon. I've seen it time and time again, but I've always wanted to be a part of it because it's crazy. On KuCoin, you'll see these coins go up 300, 400, 500% in a day. And I want to be in it on the action. So there's a coin called TON, the Open Network, that intrigued me. And I said, you know what, this morning I'm getting up early. I'm gonna check out this coin. So I did. And I had my alarm set for 5 o'clock, which was right when it was supposed to launch. It did not take me more than 5 to 10 minutes to kind of get up, get my phone, to not be still a sleep zombie, and to look at this thing. And it was already up 400%. Okay, 5 to 10 minutes from launch, 400%. It was absolutely nuts. And then you would think that, these pumps happen maybe throughout the day or over the first hour. No, the pump was done. The pump was done in 15 minutes or less. It was absolutely nuts.
That Aptos was the one that has been the latest one that has actually held, and it's a layer one, and it's interesting that it's held its value. It's about $9 now.
Personally, I think I want to start trying to get into these layer one projects very early on, and just with a little bit of money, because it seems like the ones that pan out usually scale very largely. I mean, look at any layer one token that we have right now and what they were on inception and where they are now, and it's insane.
Prime example is Solana.
Yeah, just take out Bitcoin and Ethereum, right? Because those have been around for a long time. Let's talk over the last 2-3 years, if that. Yeah, Solana would be in that, wouldn't it?
Solana, yeah. I think that I remember them at a couple of dollars fairly early on. I want to say maybe January or February, they were in the $1 to $2 range. Again, that's another product that's backed by Sam Bankman-freid, by the way. And that ripped up to, at its peak, it was over $200. Where are we at?
I'm looking on KuCoin, which this is probably not going to be from inception, but at least from its launch on this platform. And it opened up at $25. Now, right now it's $31, so okay, not so great.
Yeah, but it did go up to $300.
On this platform, it was at $259.80 at its peak. And that happened all within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's say like 4 months. Like from launch to peak, 3 to 4 months. That's not that long to wait for 10x on your investment. And I'm not talking about a lot of money. I'm talking, 20, $25 on each one of these layer ones, and just throw it in. And that's me being cheap. If you want to do $100 on each one, if you can get in at the right time, you kind of wait for that pump to happen. Like I said, within the first 5-10 minutes, and then you let it kind of trace back to where it's going to settle. And then you get in there, if it goes down 50%, you just cash out and just take your hit. All you need is that one to hit. You just need that one to hit, and it makes up. And I'm specifically looking at layer one tokens because, like you said, even this APT, like they're a layer one and they've kind of held their price. Whereas these layer two tokens, like there's the hype of them getting listed on exchange and then they kind of fizzle.
Solana, right? I'm looking at it from January of 21. I see it at $1.45. So $1.45 up to $259. That's a pretty substantial rip up. And at their peak during inception in August of 2020, it was around $4 or $5. Aptos. Would you take a swing on Aptos right now? Are you looking at it on KuCoin?
I'm not currently looking at it, but I'll switch over. It is APT, yeah?
Yes, APT Aptos.
Yeah, I mean, I wouldn't be opposed to, like I said, just buying a few, letting it sit and see what happens. If it goes down, if I lose 50% of my small money, I'll take the loss. It's not that big of a deal. But if it hits, I mean, hey, good hit.
Would you do this in the game, or would you do it with your private account?
I think I'd rather do it with my private account just because I don't want the money locked up on an asset I'm trying to hold long term for the game. But yeah, I think I'd rather do it private.
What do you think would be a reasonable amount to purchase?
Well, it's going to depend on your portfolio size, right? Like for me, first off, I'm not trying to hit big. I'm not trying to lottery hit here, right? I'm not putting $1,000 into this hoping that it 10x's. Even then, that's a small lottery. But it's I'm just looking to play. This is not serious investing for me. This is not how I plan to make my gains in my portfolio. This is just a side interest that seems fun. So
this is a long shot. How much you willing to throw in?
Depending on the project,
gate?
let's say $25 to $100.
Okay, so you'd be looking at spending. You'd be looking to get 2, 3 of them at the low end, 10 of them at the upper end.
Yeah, and I haven't done a lot of looking into on APT, so I don't know enough about it to pull the trigger on that right now. But I think this discussion has led me to want to go ahead and get in.
What if I told you that I own some?
I would be surprised. I would be surprised.
I do.
Do you really? Let me guess how many.
Fire away.
I'm going to do a guess, and if I'm wrong, I want you to give me an over-under. I'm going to guess that you bought in around the $7 to $8 mark, and you pulled the trigger. Wait, first off, qualification question: Did you buy this for your personal account or for the game?
Personal account.
Personal account. You went ahead and you bought 20 of them.
Under.
Okay, under. So you bought like 10 of them.
I bought 10.
Okay.
I bought 10 at 2 different. I scaled in. I bought 5 at like 9.10, and then another 5 at 9.45.
Okay.
I think that's reasonable as far as scaling goes, because it held around $7 for quite a while, and I would be interested in DCAing. If it goes back down into $8, I'll buy another 10. If it goes down to 7, I'll buy another 10, and then kind of work through it. I wouldn't mind having 100 of them because I think it's got some promise, and I think $900 is worth it if I can keep it on average to be around.
I'm definitely going to look into it, and that I want to be in it. I just want to look into it to know how much I want to be in it.
Well, I think this is because it's coming out in the bear market. A lot of these projects, that was Solana that did that, that came out during that time frame, that ended up doing very well once the bull market hit. So being that they're becoming known at this time, and they've got some time to grow, and they're doing it when they've got funding when the time is bad, if they make it, I think that it'll be worth it.
Be a fun time. Alan, we haven't talked about global news yet, or market news, or anything. So what do you have for us over there?
Well, so for me, again, this is one of the things that helps me make my midterm decisions. And what I'm looking at over the next couple of weeks, we're still in the midst of the third quarter earnings for the traditional market. Alphabet and Microsoft both took a pretty big hit on Wednesday, down about 6%. Meta got absolutely face smashed yesterday, a 20% hit after hours. They had a lot of issues with their advertising, and it's just not coming through. Right now, the dollar is weakening. The pound and the yen are coming on strong. The Japanese have bought, I don't remember how many billions, $50 billion worth of their bonds back. We've got a new prime minister in England who has a new plan that should be unrolled in the next couple of weeks. So there's been a little bit of weakening there of the dollar, and dollar strength is inverse to the relationship of Bitcoin, which is partly why we saw Bitcoin pull the market up. We also got some rising oil prices, and again, that's also something that kind of weakens the dollar. So there's a lot of things that are moving against the dollar and driving it down, and that also kind of pushes up Bitcoin. So We've got Apple and Amazon earnings that are coming out today, which is Thursday. That'll be after hours. We've got Coinbase coming out next week and a FOMC meeting next week. And then finally, the most important thing that's going to happen in the next 2 weeks is going to be the United States elections. So we'll see kind of how that pans out. Finally, there's been one more piece of traditional news that I've been waiting for, and I've got a would you rather.
Tell me about this would you rather.
Okay, so we're talking a little bit about the traditional market, Craig.
Okay.
And as I'm sure you're aware, Elon Musk is pretty much done with the purchase of Twitter. And it looks like he's going to go ahead and finish the purchase of it. There's been some back and forth of him online kind of looking like, oh yeah, I'm going to fire 75% of you guys. And then no, I'm not really. But that's not what this is about. This is about Elon bringing in some Doge and requiring you to pay a couple of Doge here and there for your Twitter accounts to get rid of all the bots.
Interesting.
So there's a lot of information that's out on the web that indicates that he's very interested of using some form of payment, and Doge would be interesting enough. Now, we've had a pretty good run up on Doge over the last week with everything else, of course, but it's up about 14 or 15%. My question to you, would you rather invest into Twitter or invest into Doge?
That's tough. Okay. Actually, an easy answer for me. And here's the answer and the why. The answer is Doge. The why is because Doge has a very cult-like following. You can always count on random rallies. You can always count on good news being extremely good news, right? It just takes a little bit. Like this news, it's not even concrete. It's an idea. Nothing has came out and said we're doing this, and yet you've seen Doge absolutely pump on the news. And I think I would rather invest in Doge at the right price. I'm not just like getting into it right now after a pump. But Twitter doesn't have that same thing. Twitter follows all the normal market BS, right? There's going to be analysts that come out and put ratings on it, and they're going to be looking at profit and loss and balance sheets and this and that. It's going to follow normal market waves. And I think Dogecoin at the right price, if I got in on it before Elon takes over at a decent price, I think will go way, way beyond what Twitter will.
I agree. On the end part of it, I don't know if I agree on the why part of it. I've got an additional follow-up on the why.
Okay.
If Elon is right and a majority of accounts on Twitter are bots, that is going to drive the price down of the stock.
Absolutely.
So to me, that would be if he does this, it's an immediate loss.
At the same time, if he comes out and reverses course on Doge being involved on the Twitter platform at all, would you not see the Dogecoin lose price as well?
I think that it may, but I don't think it will lose as much as what would go down from the stock. I think the stock would decrease at a greater rate. And again, it also kind of depends on how much bot usage is on Twitter.
Well, see, here's the problem I have with that is that even if there was a large amount of bots on the platform, the financial statements are still the same. So it's hard to see the stock drop too astronomically, right? It's not going to lose 50% of its value because it's like, oh, there's actually a bunch of bots on here because they're still pulling in all those advertisers, which will affect what advertisers are willing to spend.
Exactly. My point is like, well, I thought I was reaching 500 million people a day. Oh, it turns out I'm reaching 10% of that.
Yeah. I mean, I think it will affect it. But even on the advertiser side, like even if they thought that they were reaching a certain amount of people a day, I'm sure they have some sort of metric to show how effective that advertising is, or they wouldn't be spending millions and millions on advertising on Twitter. So they know the effectiveness of their advertising, and they know what they're paying for their advertising. And yeah, maybe they're going to decrease their cost a little bit on the news, or their willingness to spend on that news. But I don't think people are just going to flee from advertising on Twitter because it turns out you're not reaching as many people. Because again, at the end of the day, I'm sure they have the metrics to show the engagement rate with that advertisement to estimate about how much money they're getting in return.
Well, I think you're right with that, but if they can't determine which one's a bot and which one's a human, I don't think it's there. And also, if the majority of their money is coming in for advertising, what we've seen from Facebook, from Alphabet, I mean, Microsoft, all these that are being hit by their advertising budget, and that's what's driving down the stock prices now. That just kind of goes in line with what I'm saying. If the advertising is getting cut because the economy is slowing, that's the first thing that gets cut is advertising. And that's only going to go along with that. Now, long term, I don't know. I guess here's what we'll do. We'll find out in 5 days because that's when they report.
Yeah, that's true.
It'll be interesting. Have you ever owned Doge?
Have I? That's a good question. I don't think that I have. I don't think I ever really had a want to. I know that I've
short-term trades.
I've owned Shiba, but not Doge. Like Shiba was on a short, I believe, but I don't think I've ever owned Doge. I mean, mostly because I'm not drawn into the I own 1 million Doge when it's like 0.00. I mean, it's not that low anymore, but in the past it had been a bunch of zeros after the decimal. Mm-hmm. And I know some people were just enamored with the idea of I could have 1 million of these, and if it goes to 1 penny, it'll be worth, 10 grand. And it's like, yeah, but the market cap of Dogecoin to go to 1 penny each, you know what I'm saying? Like,
yeah.
And I'm just pulling out random numbers here. I mean, I'm not saying Doge can't go to a penny, but
that's what people are talking about when they're talking about it going to $10.
Yeah, I'm just not intrigued with the idea of I can own a bunch of these and they happen to hit X price, it'll be worth this much. And it's like, yeah, but the likeliness of that happening is not very high. So I was never drawn in by that. I was never drawn in by the meme aspect of it, like when it was developed initially and it was just kind of a meme coin. I was never drawn in by that. I had no want to be into Doge. I know they're starting to turn around, and we haven't talked about this yet, they have the new Doge chain. So they have their own blockchain now, and they have a new coin that goes along with that, the DC, the Doge chain coin. But yeah, I mean, I know they're trying to be a more serious competitor in this world, but it just, I mean, outside of Twitter, I just don't see it being a big thing.
Okay, well, would you say you're more likely to buy Doge or more likely to buy Aptos?
More likely to buy Aptos.
Oh, I didn't see that coming.
Yeah, I mean, again, I feel like it's already pumping on it's buy the news, sell the, or yeah, buy the rumor, sell the news, yeah. Right? And everyone's buying it on the news already. It's already up. And then if the news comes out, like,
it's at 7 cents. It's been up to like 80.
Okay. It's, I mean, just think of it like, here's a recent example. And I think about Ethereum. There was the Ethereum 2. It was the new proof of stake. It was all this. And all the hype on the September, 28th, I believe it was, all the hype of it officially launching and going out, and the merge was happening, and all the price was ramping up, and then it happened, and nothing happened. Like, the price was already baked in.
Yeah.
And I feel like that is the case with Doge. I could be wrong. Again, it's a cult thing, and I'm sure more news on it being official will probably pump it up, but I just don't know how much, and I'm not willing to take the risk, and we're not even sure it's going to happen. So I just don't want to be involved with it. Aptos, on the other hand, if I read into it and I decide that this is something worth investing in, I'm going to buy into it.
Well, kind of going back to our rules and some of your strategy and the way that you look at things, I mean, it kind of has a top in line because it's been up to 70 cents or whatever it hit summer before last. Aptos doesn't. It doesn't have a top yet. It hasn't been around long enough. sky's the limit. Is that what you're saying?
I mean, kind of. It's more of the, do I have faith in the project? And again, I don't see a use for Dogecoin outside of Twitter. And if Twitter rejects it, if Elon does not go through with this proposed idea for whatever reason, whether it's regulation or just his choice not to do it, there's no use for it. It's just another coin. And yeah, now they have their own blockchain, so they're trying to find a niche in here. But Aptos is trying to be, something. It's trying to be the Solana killer, as I've seen it labeled, and so like I can see it potentially has as a use. Right now I just don't see that with Doge.
Okay. Well, let's get into the challenge a little bit. We've been doing some trading. For those of you who are new, Craig and I have a weekly challenge where we add $100 to a trading account that is set up specifically for us to try to race to $100,000 off of that $100 per week that we're putting into the accounts. So we are on week 18 that is starting today. This is our 20th episode. We've had a few discussions in between, but the rules of the game are that we have $100 allocated to us. We can do as we like. We can leave it on the sidelines. We can stake it, bought it, long it, short it, margin trade it. The only thing that has to happen is it has to be put into that account. So, Craig, what have you looked like? What you got going on this week?
Well, I've continued with the margin trades, just trying to hit the quick 2-3% in and out, make the trade, make the money. And that's continued to work well for me when I follow the rules. There's been a couple of them that, the 4 hour, the 1 hour RSI is there, but the day isn't quite there yet. And I say, forget it. I think it's a good time. And then that bites me a little bit. And then I have to be a little bit more patient with those trades. And then, I don't get the best entry. And so I end up taking a small amount of profit at the end, just not a ton. So an example is, earlier I got into Atom and the day was only at like a 56 RSI, but the 4 hour and the 1 hour were at 75 and 80. And those numbers excite me. So I got in, and then it kept going up for a little bit. I waited for it to pull back. I took I think I took about a $7-8 profit on it just to get out. And turns out it pumps back up after that. So I'm glad I did. But, following the rules, making sure that, and it's not even following the rules, like our 8 rules, following my own strategy of the 3 different time frames above, specifically the 1 day, the 4 hour, the 1 hour, I want them at 70 or above, looking for a clear resistance line above and trying to make sure that there's no news on it that's making it pump up. Those are the things that I'm looking for. And when I follow those, I've been successful a vast majority of the time in my quick margin trades. And when I don't quite follow them, or if I'm just not quite patient enough, I always end up getting bitten. But I haven't lost yet. I haven't had a miss yet. I've had a couple neutrals at least.
Those ones when you're getting out there more defensive trades, right? Where it's, I'm going to go ahead and get out, whether you're making $5 or $10 or you're losing $5 or $10, it's taking the opportunity to exit and look for the next trade.
Yeah, absolutely. Yeah, there's been another one of those with Cardano. I took a short on Cardano. I was profitable, kind of. It wasn't quite to my level yet, but I felt like I was tied up on it. And I wanted to do other trades, but I don't want to take out more debt in my margin account, and then my debt to asset ratio gets a little worse. So I've exited trades before on a slight profit just to open up some room. The other big news for the challenge, though, Alan, is I am out of my bot. Finally.
What?
Yeah.
Right,
so
you didn't start the discussion with breaking news. I'm out of my bot.
Yeah.
Because I've been interested, and I've been impressed on how it's turned out. Even though I know that the last time that we've discussed it on air, it wasn't exactly where you wanted it to be. And again, it was more of a defensive trade. It has encouraged me to explore that a little bit more and look. I'm looking at a Ripple bot. I know that you didn't keep yours as long, but that is definitely something I'm interested in. So why are you out of the Bitcoin bot now?
I'm out of the Ripple bot. I did that a while back because it went. I didn't do the infinity grid and went out of my range. So I was already out of Ripple. I was all USDT. It made sense to close the bot. On the Bitcoin bot, This one was infinity grid, so I could have rode it to whatever price I wanted. But I expect the market to pull back some from here. And if I'm already selling out of my Bitcoin on the way up with this bot, it makes more sense from an investment perspective on trying to make a profit to just get out of all the Bitcoin now and then wait for that price to pull back and then choose. I can open up a bot again at that point, and I'm better than if I would have just left it in the bot, right? Now, if the market moves sideways, I would have been better off in the bot. If the market goes up, I guess technically I would have been better off in the bot because it would have sold a little bit more Bitcoin along the way. But it wouldn't have been much. The grid APR was okay. It was a 16%. So as far as like staking Bitcoin versus botting Bitcoin, that makes sense as long as you're not getting bottomed or topped out on it. I was pleased with that. But the other part of this was I wanted to kind of bolster my margin trading account. Because for the challenge money, we're starting week 18, so we can have $1,800 allocated in there plus our profits. I haven't even moved all my money into that wallet. So I've been margin trading with outside of the profits $700. And that doesn't leave a lot of room to, I don't want to 5X that and take out that kind of debt to asset ratio. So trying to move that bot money over there and have a bit more assets to give me a little bit more that I can multiply, then make a little bit bigger trades. And then, these 2-3% hits turn from, me making $20, $30, $40 a swing to making, $40, $50, $60 a swing.
Mm-hmm. Does part of the decision to get out of that bot, is it based on your belief that the market is going to be going down in the next couple of weeks?
I do believe that. There's been some encouraging news for cryptocurrencies in this last week that has helped boost the market up. But at the end of the day, we still seem to be in a bear market. There's no big reversal of now we're in a bull market. And yes, it always starts somewhere. But do we really believe that's now? There hasn't been any big change to turn that around. And I'm not a believer yet. I want it to happen. I'm just not a believer yet.
Well, typically what we see with this is on those election years, there's a little bit of a run up until the election, and then after the election, throat punch. So I'm kind of in that same boat that you are. Still getting caught in a couple of shorts while everything was getting pumped. I didn't get liquidated or anything. And I did make a little bit on a couple of them. I'm currently in a sushi short, but I'm a little bit underwater on it, but it's starting to kind of get back in line for me. But I think once I exit this, I'm going to kind of watch it a little bit leading up next week. I had expected, based on what I thought was going to happen with the tech news, that it was going to be bad news, which it was. We didn't get those pullbacks in the market that I thought that we would, but part of that was again from the Dixie and the dollar coming in.
So what would you have done different on the sushi trade? I guess the question, that is the question.
How did I get into it, and then where was my error?
Yeah, where was the error? Was it not aligning with the 8 rules? Was it a strategy error? What was it?
So my entry, I had my trend lines drawn in. I waited for sushi. I was patient. I waited for it to hit it. It dropped below my trend line, which is what I was looking for. Then I lost patience, and I didn't wait for it to double check it. I like to catch it on the second bounce off that line, and it didn't. It was a fake out. And then what happened was it ripped after that. I did get out at a later time and re-entered at a higher price. It just wasn't high enough. So I've already reclaimed a little bit of it, adjusted it slightly, but I still needed to move some more. I waited for it to double check that line.
What all did you check going into that trade? Was it just the trend line? Were you also watching the RSI? What all did you look at?
Yeah, so the RSIs were high on the 15 and 1 hour, which is what I like to look at. And when I mean high, we're around 80-ish. And it was still fairly high at the 4 hour, but it didn't hit your 1 day because you like the 1 day, 4 hour, 1 hour. Mm-hmm. And I was looking for something a little bit quicker. And then I hate staying in them overnight because who knows what's going to happen in China overnight. There's no telling. And so I didn't want to do that. I was looking for something a little bit quicker, and it just moved against me.
So one more question that I have for you on that is, I've said in the past that I will set a stop limit on my trades that if they go south, or I guess technically if they go bad, if they go bad X percentage, I'm out. I'll just take the hit as long as I hit my trades on the plus side more than I do the negative side, I'm profitable. So there obviously wasn't a stop limit. Was it due to your conviction that it was going down? Because that's what I've cited in the past, is if I'm convinced it's going one way or another, I won't do that stop limit. Was that why you didn't have it, or what happened?
So I was watching it. I was expecting from my entry in to my exit, I was expecting within 45 minutes to an hour of a movement where I was going to be happy with clearing 50 to $100 on my trade. And then it didn't happen. So as it moved up, I re-entered with an additional amount of assets, and it kept moving against me. I then ejected and then got back in. So I did not set a stop limit, although it was danger close on where the psychology would kick in for me to say, okay, I can't handle anymore, I'm out.
So what would you do different? You mentioned the retest. Is that the big lesson for you on this trade?
Yeah. So if I would have waited for it to retest it, that would have saved me on this trade.
So
patience.
Rule number one, be patient. It reminds me a little bit of my ENS short that I did a while back, where it wasn't that I didn't wait for it to retest, and all the RSIs were there for me. The problem was I had said afterwards that I wish I would have waited for a sign that it was going to pull back.
That second candle.
Yeah, I'm just looking for some sort of red, either a significant red candle as the first one, or two smaller red candles, something to show me that it's starting to flatten off at its RSI instead of just continued momentum. And that almost seems similar. It's similar. You're looking for a retest, which is, for it to, hit, have the green candle, have a red candle, have a green candle back up, and then another red candle after, and you say, okay, that's the retest, we're good. For me, I'm just looking for some sort of sign of slowing momentum. So I think that's a similar lesson learned by both of us on two trades that I end up I basically broke even, and right now you're about at the same point.
Well, like I guess the one other thing that I would say where I should have hit the eject button instead of re-entering was with the volume, because there was a significant amount of volume that came in on that green candle. It wasn't like it was, it just kind of ticked up on me after time. Man, when that joker hit, it